as we'll get things going. What I want to talk about today is we all know how we have the five finger strategy, and that consists of, um, you know, the stocks have to be between 90 cents and $12. They have to have a float of less than 40 million, preferably less than 20 million. They have to have at least 1/10 the volume. I mean, the volume has to be at least 1/10 the float in the pre-market. Okay, it has to be up over 15%, and it's got to be up for a reason, for news and earnings. And then, of course, there is the kicker, and the kicker is things like phase three drugs, mergers and acquisitions, things of that nature. Now, let me get out of this voodoo screen here, and I want to pull up some charts here. Going to go on trade ideas, and I want to talk about the stocks that we traded on Friday. But before I talk about the stocks we traded on Friday, you know what? I'll jump into that, and then we're going to go back to what I traded on Wednesday when my mentor was here. That was a very interesting day. I traded MTIF or MTBF. I'll look it up in a second. And I bought it at the breakout, and it surged. And I had a nice big gain. Now, this is the first time my mentor was ever with me while I was trading live. So I get out, I scout my way out, little by little. And he says, I'm going to get in at 3. And it was at like 5. And I remember looking, I'm like, why would he get in at 3? And then he told me, he's like, well, I'm going to get 3. I said, I'm going to look for the 5-minute candle. If it's a And I was like, oh, the 5-minute candle. Yeah, you taught me about the 5-minute candle a long time ago, but I forgot about it. So listen, breakouts are great, but there's something called the 5-minute. Well, it's not really got a name, but let's give it a name now. It's the first 5-minute break. So that means when you have a 5-minute candle, the first time it breaks, that is usually a sign of bullishness as long as the volume and the level 2s match up. Now, there's no level 2s on trade ideas, so we're just going to do it with the volume. So the first stock that we traded on, that was Friday, yesterday, was this seal, right? So as you could see, we were watching seal in the pre-market. I think it was popping on some phase 2 news or probably some pump and dump news, but my goal was to get in over the highs of the pre-market. We're breakout traders. We like to buy in at the breakout. So what I did was I bought in, and you could see right here, it broke over the highs. I got my order filled, and then what happened? Shoo! It just dumped. So I immediately got out, and I think I lost like 12 cents. It was a small loss. I got stopped out, bottom line, because it broke the highs of the pre-market and pulled out. Now, if we were using the 5-minute first break strategy, this would have never happened. And with this stock, I was skeptical. Anytime you're skeptical, that's a great time to use this strategy. If you think a stock meets the 5 fingers and has a kicker, mergers and acquisitions, blah, 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 then you could buy in within the first 5 minutes and be confident as hell. But with this one, this has been on the scanners in the morning the past couple of days. It's a great time to use the first 5-minute candle break strategy. And we're going to come up with a better name than that. If you guys can think of one, let's do it. It's not anything new. It's not anything I created. People have been using this forever, and you could probably find other videos on it. But I totally forgot about it, and I think it's perfect for our group because it's along the lines of trading breakouts. Listen, you can't trade breakouts all the time because they don't happen all the time. True breakouts, you're going to do a lot of sitting waiting for true breakouts. So if you want to trade and you want to make money and you want to scalp, you're going to have to get in the middle sometimes. Otherwise, you're just going to end up losing money if you're always just looking for breakouts. You have to get in the middle sometimes. Now, this is a great way to get in the middle. I'm going to show you 2 ways to get in the middle today. All right, and safely get in the middle. So here we have SEAL. This is something we traded on Friday, and I traded for a loss because it stopped me out. Now, as you can see here, I put a line. I put a line of resistance and support. It's both because, as you can see, this is right around about where I got stopped out, and then it kind of just dumped. But what I want you to focus on, more or less, let's go ahead and zoom in a little here. What I want you to focus on is, so these are all 5-minute candles, by the way. So I pretty much got stopped out, I think, on this second candle here. And but if you watch closely, it starts to go down. Down, 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 down. Boom, right here. This is where I want you to focus, okay? Let me put a horizontal line. Here's a clear support right here, okay? This is your new range area. This is where things become important, okay? And so it comes down, boom, it hits a support, and then it pops up. And I want you to notice it's also interesting. I think it hit the, what is this, the 200-day EMA or the 13-day EMA, and then came back down. But forget that. That has nothing to do with it. Just look at the candles. And I also want you to look at the volume. So boom, it comes down, right? It's got very little volume at this point. The volume has been going down, 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 right? And let me see something here because it's not letting me see the whole volume. All right, yeah, here you go. So you can see the volume's going down, 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 no volume, no buying, and then all of a sudden, boom, you get a big burst in volume. But the volume's not enough to break over the previous resistance. Boom, another big spike in volume. We're talking, this one right here had alone tells you 200,000 shares of volume. This one, 1,400,000 shares of volume. So anyway, the bottom line is boom, you get the second candle, it breaks over the first red candle. That's called the first 5-minute candle break. That is a perfect example of the first 5-minute candle break. You have a candle to the downside, it pops up right past it. That's your first 5-minute candle break. What happens when you have a first 5-minute candle break? Well, you have to look at the volume. The volume is staying consistent, and the stock is soaring. This would have been a great entry point. Now, let me show you another example where it didn't fully happen. If you go back just a little bit, you can see on the first green candle, it pops up, and then you have this big red candle. And then you have, okay, another green candle, right, with a little volume, and then a second one with a little more volume, but just not enough to break over that previous red candle. Therefore, it's not a first 5-minute candle breakout. The first 5-minute candle breakout over the previous red is this bad boy right here. If you would have had your entry, your stop buy order right here, you would have got filled at around 269. And listen, this is the thing I want you to understand. Yeah, you can get in at 267 here or whatever, and maybe hopefully get out, you'll say, I'll try to get out of 320, and hopefully you get out on your whole 1,000 shares and you make good money. But why do it like that? The key is to scalp. If you watch me ever trade in a winning trade, I'm always exiting little by little. And if I'm exhausted all my shares and the stock is still going out, I'll get back in. So, and then I'll do the same thing. I'll exhaust out. So the best thing to do when you get in these situations is not wait and hope that it goes, white knuckle, it goes to the moon. No, you start getting out, get out here, get out at 290, get out a little before 3 because you know 3 is going to be a tough break, although you didn't have to worry about it in this case because you could see it blew right through 3. But this is a 5-minute, your first 5-minute candle breakout. Why is it called that? It's the first 5-minute candle to break out over a red candle with volume. It's very important. You remember with volume because sometimes it could pop up and pop right down if it doesn't have the volume to keep it afloat. So that is one strategy to play a breakout before the high. Okay, and it's very important that you learn that. And if you guys have any questions, please feel free to ask because I would love to know if you're understanding this or if this is going right over your head. Now, this happens in multiple circumstances. Let's just see. I traded another stock this day, and I don't remember what it was. Since I got stopped out on this for a loss, I played another. I know we ended Friday on a win. Oh, it wasn't because of that stock, but I did win on this next stock we played out. But we got out of Friday on a win because of the UVXY calls. Now, by the way, guys, tomorrow, the following day, Monday, there's something called the Monday Friday rule. You could Google it. It's like this phenomenon where whatever happens on Friday in the market happens on Monday. And Mondays and Tuesdays seem to be the biggest days for crashes and breaks and things like that. So I'm excited for Monday to see what happens. But let's see what else I traded on Friday. I traded UVXY options. We'll forget about that. That has nothing to do with this. Although it does. But how do I get out of this? Now, I'm going to go see here what I traded. Here you go. By the way, guys. Oh, no. My live video ended on Facebook. And that is a shame, shame. Whatever. Let's just go live again. Oh, you know what? I'm on YouTube. I could just share the YouTube video. Duh. All right, cool. So let's see. Unless YouTube cut me too. Let's see. I'm testing all these things right now, so I'm gonna forgive me. Give me 2 seconds. Just let me see. That's you guys. Where the hell is? Okay, so we're still live on Facebook, so I'll just share that on Facebook. Now, tick. And hold on, I gotta make sure my account numbers aren't exposed. Give me 1 second. What the hell? Okay. All right, so let's pop back on screen share. But I'm telling you, I think we're gonna have like a great time. We're gonna start doing these 5-minute candle pullbacks. It's the first 5 to break over a steep red candle like that. You can put your stop buy order right at the top of that red candle and lay back. Everybody, when Marvin did that, was shocked. We got in this stock at a perfect breakout. I'll show that to you. That one was real quickly. Where is it? That was MTFB. All right, MTFB. MTFB. MTF. I don't know if I'm going to be able to go back that far, though, on Wednesday. Oh, yeah, I can. Wednesday was the 20th. Okay, so here's Wednesday. 5-minute candles. Let's stretch it out. So this is a stock we did really well on Monday. I was able to catch this whole swing right here to the upside, pretty much. Yeah, I was pretty much, I caught this whole swing. I got in at the break at 350. It was the earliest fill I could get, and I scalped it all the way to the top. This is a good example of a breakout play. Unfortunately, in this one, the breakout kind of happened in the pre-market, and I don't like when that happens. But look at this volume. This volume was just there. Now, I had got in right here, and then I got out. So let's see. Okay, I want to see something here. So, where's the prices here? Now it dropped down. See what I got stopped out here. Okay, so you have to keep in mind that this is a red doji candle. It still counts as a red candle. It doesn't need to be some big candle. It's the first 5-minute candle to break over. So unfortunately in this one was just a dump. But he put a buy order at $3, okay? What he actually did was found a psychological resistance. He didn't use the 5-minute candle one on that, but you can kind of see here it didn't really make it. It's not the perfect formation. You wouldn't say that this is a 5-minute. That would be wrong. He basically found the psychological, or this is what my mentor traded on Wednesday, and he said he was going to buy it at 3, and he had a buy order at 3, and look what happened. It shot down at 3, just touched 3, didn't even go through it, got filled, and shot up to 333. So I guess he just used the laws of psychological resistances, or I don't know. I can't speak for him. I don't know. He's been doing this for 25 years, and he knew that at 3 it was going to pop. I don't know why. But anyway, so is it? No, nowhere in here can you really see, that kind of formation. All right, so there's no first 5 on this stock. Let's look at another one. What was the one on Friday that I traded? That's that other one. SRNE. Let's see if that formation reveals itself in SRNE. SRNE. Okay, here's another one. So it kind of, let's look for the first 5-minute candle to break and see if it leads to anything. I haven't looked yet at this one, so it might not, but I know I played this one for a profit. And I know David played this one for a really, this was like his biggest profit ever. I guess he caught the whole break. So the first green to pop over. Okay. All right, check it out, guys. So we actually do have it here, but it's not as clean cut as it was in the previous example. Problem is the volume is not really there. So I wouldn't play this one, but you can see the formation is there. So the first green candle, the first 5-minute green candle to pop over a red is this one, right? This guy right here. It popped over this red, it popped over this red, it even popped over this red. So that's it. Support broken. The support was right around, mark up, horizontal line. It was right on the top of this candle here. And it broke, and it was confirmed by the next one, but it went back down. Now, me, in this scenario, I would say, well, as long as it doesn't break new lows, there's no reason to get out. I would probably have put my stop loss here. Of course, I would say that now that I can see the whole chart formation, who knows what I actually might have done. But there's a good example of the first 5-minute candle to break. It didn't happen until 11:30, but after that, what happened? A rally. Even though it did have that little pullback, and the volume definitely picked up after this point, and it's also a double bottom, which is a bullish sign. So you got your double bottom, and let me see. Sometimes I can't see messages if I'm in full screen here. 10:30 was break. Oh yeah, yeah. You're right. You're right. That's why a volume is extremely important. She's saying right here at 10:30, there is a break. You know, but listen, in any scenario, in any play that you play, you really are supposed to look for a confirmation. Okay. Now, let me give you an example. So right here, this is a shooting star followed by a hanging man, followed by another shooting star. Those are all candles that tell me that this should go to the downside, but the volume is kind of pushing it up, and actually eventually it did go to the downside. So what do I mean when I say wait for the confirmation? In a scenario like this, let me see, where it's going so deeply down to the downside. Let's see. Somebody give me another one. Now, like I said, there's no golden rule in stocks. And let me see. Yeah, this one doesn't really count as the first 5 to break because it's not below. It's not an engulfing candle. If Let's go back to the other one because now you got me second guessing myself. What was the other one? Seal. Okay, so seal, the first 5-minute candle to break was actually this one, and there was a confirmation. You know what I'm saying? So you don't necessarily, you could put your buy order at the top of every red candle, but that's ridiculous. You really want to wait for the confirmation. So, okay, it broke. Is it going to take off? Yes, it's taking off. If you just, every time you've seen a red candle, put a buy order in at the top of that red candle, you would get stopped out. You would lose all your money. So in any formation where you're using candles as your guide, you always want to wait for a confirmation. And I mean, look at the confirmation on this one. So you had the first green one, which didn't break, and then the second one, which didn't break. You could say that that's actually your confirmation. You know, in that other scenario, SNRE, what is it? SRNE. Yeah. So you're saying this one broke, and yeah, but there's no confirmation. It's just it popped up, and there's a red candle. You don't really keep. Do you understand? And the most important thing out of all of this, which I'm not emphasizing enough, is volume. So there's no volume here at this point. There's just no volume. So you see the pop, but you don't see any volume. That's another confirmation. Let's go back to SEAL. SEEL. $10.58. Sorry. Hold on, Brandon. I missed what you said. SRNE had a break above the legacy 9 line at 10:30. SRNE. Yeah. I don't have my legacies, but that's what I use on Thinkorswim is the 9-day legacy EMA. But yeah, I mean, listen, guys, you always have to wait for a confirmation. So things can break above the 9-day moving average. That doesn't mean you jump in. You want as many factors in a line as possible. So let me find something else. Let me find another example here. Let's go There's so many things that can happen. Like yeah, some people just use one indicator. I know someone that just uses a 50-day moving average. If it goes above the 50-day moving average, he's in an SMA. I said, well, how does that work? Do you check the volume? Do you check the level twos? Or are you checking anything? No, I'm just getting in. So this is not a system where, oh, this candle broke over the red one. It's the first candle over the red one, but you have to have confirmation. If there's no volume and the stock is a dog, then you don't go in. I wanna show better examples than let's see. Um, what was that one? Oh, we already looked at that one. Um, NASDAQ, most of it. And while I show you this and explain to you confirmations, let's go to the pre-market activity. Okay. Most advanced. All right. So IMMP, we were watching. This one dumped. HIB was out of our price range, but it's up 27% and it's only $23. This is something we technically could buy if we wanted to. YRCW didn't do it. You know what? Let's take a look at HIB because I think they had a good earnings report. Boom, that's your kicker and your five finger. A great earnings report. I think. Let me see. HIB. Okay. All right. Interesting chart. Okay, beautiful, beautiful. So these are all 5-minute candles, guys. So it comes out the gate, boom. Big bear flag. If I saw this, I'd say, guys, this is a bear flag, forget it. There's two things going on here that you do not see. Let's take a look at volume, okay? Let me full screen this. All right, so it's popping down on heavy volume. All right, so now let's look for the first green to break. Okay, it's not this one. It's not this one. Pops back down. It's not this one. It's not this one. It's not this one. It's not that. Wait, okay, this one's starting to hit it. Boom, confirmation. 2 in a row is a confirmation on any candle formation. If you have a hanging man followed by a red candle, that might be a reversal, but a third candle, that's it. Go for it. Go in. You're all in. Now you got to realize that. Let's take a look at this. No, let's leave it at 5 minutes because it's the first 5-minute candle break. So here's the first 5-minute candle to break. So technically you could buy in this and there's a high probability, it doesn't work every time, that it's going to go to the upside. Okay, so at this point you can see that it breaks. Let me put my line, but I want to do one more thing. I want to show you guys one more thing. So it breaks over the first red candle, beautiful break, nice shot to the upside. You sell out the whole way, and I do want to mark one more thing. I want to mark this bottom. What's that price range there? Is that? Oh, I thought it would be 21. I thought it might be a pivot point, but it might be very close to a pivot point. Let's look at the pivot points on him. I think it's just shy. This is not the one I wanted to use. It's just shy. Yeah, it's just shy. So as you can see here, this is Friday right here. This is Friday's move, and it's actually a downward candle. It's a red. It's an upward candle. Sorry, and the R2 pivot point. So now there was a second thing I told you guys. There's the 5 plus 5. So that's the 5-finger strategy. That means that your stocks meet all your 5-finger strategies. That's your between 90 cents and $12. Your float is less than 40 million. Your volume's 1/10 of the float. It's up on news or earnings, and it's gapping up over 15%. The 5 plus 5. The first 5 plus 5 is this. 5 plus the first 5-minute candle to break over the red on a downside. But it's gotta have volume. Volume and level twos, guys. We'll go over that in another video. Volume in particular. You know what Marvin says is the most important indicator out of all of them: MACD, RSI, level 1, SMA. Volume. Why do you think it's on every single chart? Comes standard. It is the most important indicator of all. So now I'm watching, boom, I got my first red candle. Well, how's the volume? Volume is soaring. Second thing, this break, this drop to the downside. Actually, and you have another drop to the downside right here at $20, but that's in the pre-market. We don't trade the pre-market yet. We'll start trading the pre-market when we get out of PDT, and then we have bigger stocks that we're trading, stocks at this price range, 20, 30, 40, 50, 60, 70, 80, 90. So it hit $20. So let's take a look at the pivot points real quick. And if you don't understand pivot points, go to my YouTube page. There's a whole thing on pivot points. I think Spot. Spot is the name of the video, but it's not called Spot. It's like Secrets to Exits and Entries is the name of the video on my YouTube channel. So just look up Luke Breakout Trading YouTube, and you'll find my YouTube channel. And it's also on my page, but for some reason it doesn't link through. I got to figure out why. All right, so HIB hits 20, but forget 20. I want to know the support it hit here. 21.29. 21.29. It's very, very close to that 2077. It doesn't always hit the fifth pivot point, because keep in mind, that's the other 5. So the first 5 strategy is the 5-finger plus the first 5-minute green candle to break over a red candle. Now, if you wanted to, you could. In certain scenarios, you'll be able to read charts, and you'll be able to say, look at this volume. This is going to break over that red candle and take off. I'm putting my buy order right above the green candle. And then other times you have to wait for the confirmation. It's all speculative. It's also a matter of fact if you know something. So here is the breakout, the pivot point. The 1, 2, 3, 4, 5. I know it's the R2, but it's the 5th pivot point. So that's the other 5 strategy. If ever you have a stock come down to your pivot point, your R2, or even your R1, and bounce, it's time to get in. It's time to get in. So these are ways to enter and look at HIB. HIB popped down. It did not have enough. Too many people were watching it. There was too much volume, but this was going to its pivot point. It just got too heavily bought. It got too heavily bought. But there, I can show you countless examples of where stocks hit their pivot point and bounce. HIB was on the most. Let's look at another one on the most advanced list. And by the way, guys, I did not, prepare for this at all. So you'll see. All right, let's look at Papa John's. I don't know. The Papa John's probably didn't do good that day because it was a bad market day. All right, let's just look real quick and see. It actually did do pretty good on a down market day. All right, so let's analyze this chart. Let's see if we can find anything. First thing I want to look at before I look at the chart is I want to know where its pivots are. And I'm already seeing here, without looking at the top of the chart, that there's a lot of volume here. It slows down and then it picks up. So let's go ahead and nope, not that one. Where's my cursor? Okay. Oh, this is beautiful, guys. This is great. All right. Well, why isn't my mouse working? There we go. If only the market worked like that. If it didn't go your way and you just smacked the computer and it started to obey. All right, this is a beautiful one. Beautiful, beautiful play. Really doesn't have anything to do with the 5 and 5 because it didn't bounce off the pivot point, but it showed you where it was going to go. Let me zoom in. So you got the fifth pivot point. It's 49. Actually, it's not 49.80. That's where the stock closed. The fifth pivot point is 49.56. So I want to keep that number in mind. Let me go add that to the chart. 49.56. 49.56 is right here. I want to add that line. Okay, and that's the R2, and I'm not even looking at the chart yet. I just want to add everything, and then I want to figure it out. And then the second pivot is 46.64. So 46. Oh wow, that's a ways down. 46.64. Create line. That's a pretty big spread for a stock that barely moves. Stock stays at 50 all the time. Oh my God. How do I get rid of that now? All right, whatever. 49.63 will have to do. Okay, this is beautiful. Now remember, I am 1 cent down. It doesn't matter really, but you can see that this is the R1. Look at how beautifully this stock is behaving with its pivot points. Never log this in. This is just the way the market works. It's bouncing on the R1 the day before, right? Even almost bounces on, well, opens up close to the R1, the first pivot point level. Oh, man, if you would have bought it here, it must have came out with earnings or something. But shoots up this one. Now let's look for the other scenarios within this chart here. Big bull flag. Shoots up, hits a high. Looks like this pre-market high is right there. See, this is a tricky one because if you had tried to, can you guys see this? This is an ascending triangle here. Look at the blue line, look at it consolidating to the upside, and look at the increase in volume at the end. It tried to break out of this triangle twice. And you have a huge cup and handle right here. This was supposed to break. I think the market was so poor this day that it was not allowing this to break, but this was really supposed to break to the upside. All right, so let's bounce back real quick. So, all right, so we pop up, we come out the market, and we're indecisive. We got a big shooting star, a red, a green, nothing really happening. It's dropping to the downside. Red candle, doji. Well, you can say here, this is the first red candle. This is the first green candle to break over the red. Is it not? On the day, this is the first green candle followed by a beautiful confirmation. And so within this chart, you have so many beautiful things going on. You have, not only is it hitting the first pivot and going to the second pivot, that's its job. That's what it's supposed to do. But you look for stocks that are super advanced, great earnings, great news, mergers and acquisitions, corporate takeovers, stocks that can actually move from R1 to R2. And a great place to find those stocks is on trade ideas. Um, and Alpha Predator is one of the ones. And not to mention, just look at the ones they got on Holly, because those are usually the ones that are popping, the most that day. But you can also get it on the NASDAQ thing that we were looking at, NASDAQ pre-market. But as you can see, another example of the 5 minute and five. And then this is the fifth, right here is the fifth pivot point. But see, you can't expect it to break the fifth pivot point. It's very rare. It happens. I'm not going to say it's rare. It happens for a stock to go from the first pivot point through the second and even further. It happens. But in this scenario, on this day when the market was dumping, but look at all these symbols telling you that the stock wanted to break higher. It wanted to break above the pre-market highs. It wanted to shoot past the R2. It just didn't have, look, the volume. The volume. Here, when it broke out, first 5 minute candle to break out, look at the volume. It's there. And then it disappears. And what happens? The stock tanks. So volume and pivot points. For now, we'll go deeper into pivot points at another time. I will constantly instill those into you so you understand. Sometimes I have marks on my charts. They're just lines. And those are pivot points. Or I'll put the alerts as my pivot points. Because if a stock meets the 5-finger criteria, has a kicker as well, and breaks the fifth pivot point, we're talking about a bullish stock, and that's something I want to get in. And anyway, Shaq joins pizza. That's why it went up. Yes, but then cut it when you see the first red or second red. Yes. Well, that's why I said I don't like to catch the whole move. I like to scale out. Now remember, this is a 5 minute candle, so most of my trades are between 4 and 5 minutes. So I probably would have caught this let's take a look at it on a lower candle, a lower time frame. Let's do a 1 minute candle. Whoa, I gotta zoom out. Oh, wow. That's why, guys, on my thing, because this is hard. You can't find the first 5 minute candle like this. On my TD Ameritrade account, if you look up my Thinkorswim Flex Grid, I have a 5 minute candle, a 5 minute candle on the left with a VWAP and a 9 minute moving and a 9 day moving average, and a 1 minute candle and a yearly chart. It's always important to know the yearly chart as well. So I have 3 charts on my Flex Grid. It tells me the highs and the lows, and it gives me the general direction of the stock. I typically don't like going long in stocks that this year went from 185 down to $4. Typically don't like going long in those. So anyway, let's go find that same move, but with the 1 minute, and see how it could have been played. Ooh. Okay, we already know it's right here. So, yeah, you had plenty of time. And then right around here, you would probably be waiting for the breakout over the pre-market highs. At this point, I'm only in, and you guys will see me do this, I'm only in about 3/4 of my shares. When I start to get to like levels that it hasn't broken before, it can always hit that and come back down. So I'm out about 3/4 of my shares when we're getting close to the new highs. I'm not hoping, because there's only 1 or 2 things that can happen when it hits that level. It can hit it and then go down, and hit it and break. So to just hold and hope is a gamble. So this whole way up, I'm selling a quarter, and now I have 3/4. Or I might just sell 3/4 right here. But just how I traded whatever that one was we traded on Friday, MTIB, I got out on Wednesday rather. What I did was I got out at this point, and I put another stop order to buy above the highs, and it filled. So I lost a few cents there, big deal. I think I sold at 490 and or 390, and then I got filled at 404. So I lost that 14 cents, but I was safe. I was safe. And it's all about how you play it, guys. And so we're breakout traders, right? We're breakout trading. We're supposed to only play breakouts. Well, these are breakouts. Give me any other stock. Give me any ticker, please. And I will show you that it either rings true or it doesn't. And when it doesn't ring true, there's only one reason. Can anybody tell me what that reason is? It's missing something. It's missing volume. If it doesn't have the volume is your most important indicator. People go crazy looking at Ichimoku and this and that. Volume and patterns will never change. People will never change. People play patterns the same way. I think that's enough for today because I wanted to keep this video like 15 minutes, and that is it. Any other questions before I wrap it up? Thank you, Tina. I hope you guys got something out of that. Just remember, keep an eye on the first 5-minute candle to break over the red. Negative thanks for the video. What do you mean? Thank you, Savannah. Thank you, Eric. No problem. Yeah, right. Thanks, Brandon. All right, guys. I will see you maybe tomorrow or Monday. I'll let you know. Have a good rest of the evening. I am going to, let's see, how do I end this YouTube video? I'm the only guy in YouTube videos saying, well, how do you do that? I'm like an old lady. Well, how do you do it? All right. Wow, 48 minutes. Yeah, 15 minutes, my butt. I gotta learn how to get to the point, guys. I gotta learn how to be quick. Let me shut off YouTube. All right, YouTube, thank you. All right, and that.